fundsupermart.com.
Hello, with us today is the fund expert from Haitong Asset Management, and he will give us a brief introduction of the recently well-discussed RQV funds. Hello, Wesley. Thanks for joining us. Recently, various RQV funds are launched in the local market. What should investors know about these funds before investing?
Yes, RQV stands for Renminbi Qualified Foreign Institutional Investor. So the big difference between RQV and QV is this is a mechanism to facilitate the repatriation of offshore renminbi into the onshore security market. So this is also the first time the Chinese authority opens both the A-share market, the exchange-traded bond market, and also the huge interbank bond market. So the feature of the RQV fund is this is the first fund which has access to all three markets at the same time.
So what are some of the advantages of investing into this particular asset class?
Well, as I mentioned, this is the first time the Chinese authority opens up the huge interbank bond market. And this market accounts for over 90% of the amount of outstanding of bond in China. And the yield level in the interbank bond market is also more attractive. Liquidity is also better. And plus, the RQV fund can have an allocation between bond and equity. So depending on market conditions, we can change the weight in equity side and deliver better returns for investors overall.
Okay, what are the biggest risks faced by RQV fund investors? What kind of investors should look into these funds?
I think the single most important risk factor about investing in RQV fund is the exchange rate risk of renminbi. Now, of course, renminbi has appreciated significantly over US dollar over the past year. But we think during the short term, there might be some fluctuation. So investors have to bear in mind about the short-term volatility in renminbi against US dollar. I think this fund should be suitable for all kinds of investors who have renminbi deposit, who have renminbi assets, who want to seek long-term stable returns in renminbi-denominated asset.
In general, what's your outlook for the China markets in upcoming 12 months?
I think in terms of macro risk for China market this year, the uncertainty is a lot smaller than last year. So overall, we think volatility would be small in both the bond markets and equity market. This actually provide a very good investment environment. So I think when we have a balanced portfolio between bond and equity, 2012 should be a good year for the renminbi asset investors.
Okay, so what's your take on RMB appreciation?
Well, I think ultimately the appreciation or depreciation of the renminbi against US dollar depends on China's current account balance. Now, so far over the past several months, we see that even though the trade surplus fluctuated every year, but still China managed to maintain a trade surplus. This actually provides a very strong fundamental support for the renminbi to appreciate over the medium term and longer term. Now, of course, short term, the exchange rate might fluctuate up and down, but I think over the long run, if investors stay in this asset class, it should be a better choice.